Welcome to the Phoenix Prosperity Podcast, where wealth meets legacy. Join your host, Tim Fergestad, as we explore the journeys of Phoenix's finest to success and beyond.
Hello, this is Tim Fergestad. Thank you for joining us. I'm very pleased to have Tanana Hairston with me here today. Tanana empowers investors to build long-term wealth while making a positive impact. As the founder of Rise Impact Investing Community Capital, IIC Capital, she specializes in large-scale real estate investments focused on affordable housing and community development. Welcome to the show, Tanana.
Oh, hello. Hi, Tim. It's so great to be here today. Thank you so much for having me.
Oh, excellent. Thank you for coming on the show. So, why don't you give a little background on how you got into impact investing, and then focus or give us a little more background on the focus of IIC Capital.
Yeah. Okay, perfect. Well, I started, probably like most people did, very early on in corporate. And I started as a computer scientist, as an engineer. Okay. And then really because of who I was married to, my ex-husband was a professional baseball player. We started seeing private deal flow at a very young age. Okay. So I started looking at, both private equity deals, right, from the business point of view, and then also real estate. So I started at a young age. And then about 13 years ago, I was asked to be the managing director of a private investing group. So think investors like Shark Tank without the drama, right? But big community at my grad school. And at the time, my kids were young and I didn't know, right, what our future, would hold. And so I really had to learn how to protect what we had and also how to grow it. So, and no one teaches you that information. No. Very passionate about it because no one takes the time to teach you.
That's my experience as well.
Oh, yeah. Yes. No one takes the time to teach you. So, wherever we would go, I was always very intentional about the real estate investing, but the holistically, collaborating and, grouping capital, that came 13 years ago, where we would create what we call like SPVs, or just call them like group investments to invest in businesses and things like that. So I learned then over the course of those years, and I was really educated on how to invest in what deals, what's the appropriate time, how to analyze risk, how to analyze the deals, how to analyze the team, the market, et cetera. And, private investing is really very similar, whether we're talking about investing in a real estate deal, or whether we're talking in, a private equity deal, which is obviously, at a different level, but it really always starts with the who, that will be, operating and managing, whatever that asset is, whether it's a business or whether it's real estate, it always starts with that. So some of the principles are very similar, when you're looking to analyze something, right? And then you go to the experience level, and then you go to the market, and then you go to the, and then you're looking at the product itself, right? Right. So it doesn't matter what that product is, again, whether it's a business data, whether it's real estate. So a lot of these things are very, very similar. Businesses are definitely much more complex, to analyze, for sure. I do find that real estate is much simpler. And that's why I focused on it, because it's much simpler for first-time accredited investors to participate in it. Much simpler on the front end, getting them to understand it, and then much simpler throughout the process, right? So that's particularly why I focus on the real estate deals, even though I did start in private equity.
Okay. I'd also add that there's it's a little more balanced. The upside may not be as high, but the downside is not as high. It's a hard asset. It's not as much variability. It's a pretty consistent asset class to play in.
Yeah. And then people understand it, right? Because even if it's not at a bigger asset level, they understand, what that smaller one looks like. So it's a little bit easier for them to understand as well. So, but yes, the propensity for the cash flow, right, looks very different, right? The propensity for, even, what it would look like from the return, those things all look different. But generally, I say it's easiest for first-time individuals that have savings, right? Yep. So I typically tend to focus there for a number of reasons. But yeah, So I did that, and then I felt like the best investors had that operational experience, so they had an exit. So I built a business, had a small exit, um, and then about a couple years ago, Tim knows this a little bit because we've been talking about it, but frankly, I'm going to be an empty nester in a couple of years. And so for me, it was really kind of giving some thought, like so many people do. Like, what do I want to spend the next 10 to 20 years
Right.
doing
What's worth
that
your time?
that's worth my time, that has meaning and that has impact, right? And then
Yeah.
what am I, like passionate about? I always tell young people, like, you know, you can get passionate from doing the work, right? I didn't start off passionate about computer science, right? But I can do that now at my age, So it's like a pet peeve I have, when I'm talking to like younger people. But now I can really be very intentional about how I want to, participate in opportunities. And so I did. I started like educating and aggregating community, doing a lot of, we do an impact mastery series. I think that's really important because frankly, 75% of people that have savings, they really end up losing it because they don't understand and they don't have the education. And there's really and if you don't understand how to grow it, right, then you can lose it because it's a different skill set from growing your wealth versus being an investor. Two totally different skill sets, and so.
Right. Yep,
So I
for
like
sure.
that spot, very passionate about it because these are things that I wish that I had known, like fast forward 25 years ago, that I had to learn through curated experiences like running that investor network and, analyzing my own things and participating in them myself, right?
Yep.
So definitely passionate about that. So my pillars are impact, legacy, and investing. Those are my three pillars. And the impact is because I was raised very strict Jehovah's Witness. So we grew up, knocking on doors in a ministry work, and it was always in the lower economically challenged areas. And so because I grew up doing that, obviously you really see the disparity of what, ones can participate in and have access to. So any deal that I do, I always look for an impact lens as well as what I would look for traditionally from, a return from a private investment that is just financially quantitatively focused. I look for both now, profit
Right.
and purpose. I just trademarked that actually.
Awesome. Yes, that's awesome. So, can you dive a little bit more into that and what impact means to you? I mean, because sometimes it's at the individual level, sometimes it's at the market level, right? You're
Yeah.
trying to make a neighborhood better, safer, cleaner, more affordable,
Yeah.
all that.
Yeah, so that actually is the number one question. What does impact mean, right? And so for us, when, a secondary part of this is when we start working with somebody, we really do, ask those questions. So if we come in, so A, we have our funds, right, that we aggregate capital to. But then, if there's on an individual level or like on an office level, if they want to start doing private impact, it really starts with the question, and we really use the UN Sustainable Development Goals, right? There's 14 of them that we start with. What does impact mean to you? And then we start with that because we really encourage those conversations, like at the dinner table with kids, with family. And then what does that mean? And it starts from that lens because impact means something different to everyone. So that's one thing that we do when we take on someone new. We always start with that lens, like what's important to you. So is it education? Is it gender equality? Is it, healthcare? Is it clean energy, right? Is it farming? Is it sustainable agriculture? Is it right? Because impact can mean anything. The one thing that we do though is, even though yes, we also do have our own funds, because we're in a community and an ecosystem, we constantly see great deal flow of private
Right.
opportunities, right? And so we will share those things as well, because impact means something different for everyone. So we don't publicly like share those or market, right? But if someone says, look, I really am interested in farming, right? So the returns are a little lower, right? So they're somewhere in the nature of like 3 to 7%, right? Your return profile. But it is the highest of impact because we're talking about food systems and agri-tech systems, right? It really is the highest of. So we have those, and we just kind of save them in a database because we really do believe in using our time on Earth that's making the world better. So even though those aren't our funds, we have no problem with like making that kind of connection there for someone that's asked us to help them come up
Right.
with their impact portfolio. Now, what we focus on particularly, right, and our lens of impact is on our real estate side. We always align things with economic environment. So for this next, 3.5 years, right, our next fund will be on first time home ownership, moving away
Okay.
from, our next one that we launch will be solely based on that. Shorter hold times, first time home ownership, right? And then our metrics, you should always be able to measure impact. That's like my number one thing that people say pet peeve when like you can't measure it. I'm like, oh, absolutely. That's why I like private opportunities because you can measure it. And the public companies, right, they're just so big, it's hard to quantify what does impact mean, right? But in the private ones, you absolutely 100% can. So we can quantify like, X number of first time home ownership that, a check that you write to our fund will give you, as well as the financial return, because we track them both always. So we track the profit and the purpose metric. So that's what we're focusing on, as good investors, right? We always look at what the economic cycle is, and then that adjusts what we decide to participate in. And also we see tons of things. So that's what we're personally focusing on the next 3.5 years. Our next fund will be on first time home ownership. You know this because I mentioned it last time. We have a debt fund, as well, for first responders. I like that because you can quantify the number, although that's about to be finished too, almost. So, and then we will do another debt fund, but it'll also be always an impact quantitative number as well as a financial metric. Like what we can say, here's the return profile. And then, we can project out in a spreadsheet, like you should be able to see what those are. You can't do that with the early stage business, with the business opportunities as easily as I can with our debt. Like I can put up a spreadsheet and say, this is what you should expect. Obviously, expect is our word, but these are your expectations based off of the business plan here, and this is your expectations based off of the business plan. And I can do that for real estate, and I can do that for debt. So we typically always have two, and so that's what impact means to us. It just has to align with one of those UN Sustainable Development Goals, and we will take it in.
Okay, excellent. It's a lot of exciting stuff. What's been your experience with the appetite for investors looking for impact over time, right? I've seen usually people who have been investing for a while want to start getting more and more involved. Can you speak to that a little bit?
Yeah. I will say that everyone gets really excited when we put that in a numerical way, just like that, because they're like, oh, wow, because if you just hear like, oh, 15% return, right? Like,
Right.
yes, it's greater, it's better than what you could get on the S&P this year, right? But it's not as exciting as, oh, yes. And by the way, and then here's what, because I'm a big believer in this, because it's a very intentful use of how I want to spend the next decade, right? And I literally mean that. And then we write checks, my partner and I, to every single one of these deals that we, and our fund. So, they actually really like it, Tim, because we can say like, this is the number that this $50,000 check, this is the exact number of,
Families that you've let be
that you're
right?
getting out of debt.
Find a home, or
that you're getting out of debt.
fund.
Or on the
Right.
real estate side, this is the exact number of people that will be first time homeowners with your percentage
Right.
that you are writing this check in, right? You're giving first time ownership to this number of people. Oh, and by the way, right, here's your financial projection metric as well. they actually like, oh wow, really?
Right.
And I'll tell you that I call it the dream life, and everyone always looks at me, but because like I just told you I had family in town, and sometimes people want to talk about what's going on in the political environment, and I'm like, you know what? We can't control that. We can't control it, right? We can't. But here's what we can control. We can control what we can do and to make the world better for our kids and the next generation. And
Absolutely.
that's why I call it the dream life, because we have control over that. And we can do it, right? Even if on this smaller level, right? Even for me, right? Because I write checks in all of our funds, right? And it's like, it feels darn good knowing that, okay, you're helping, you're giving financial education. Our last real estate deal, we did financial education, we did credit education, we did community centric circles, right? And I mean, yes, it was an apartment complex in Houston, 130 units. But, and then, yes, we're looking for the passive income and the tax. Yes. But it's really cool, like knowing that you're going to turn around and do this on top of all of that, right?
Right.
That's why I do call it the dream life. Now, with that being said, for me, some of the things that bog me down is I meet so many great people. Like for me, getting them all like they're like, oh, tell me when you have something. So for
Right.
me, because I'm really good, I feel like a gift I was created with is really because I know what makes me convert because I've been doing this for a long time, and so I get excited about the deal, right? And I share it real time. But then the back end, right? Oh my gosh, I have so many people that I meet and connect with. And so that is for me personally, right? That is one thing that I know that I can continue to evolve in because I know exactly, I get excited about the deal. I explain it very well because I know what I'm participating in, right? And then just remembering to bring all these other people along. Because I'm
Right.
really, because I really do like these things.
Right. Right. Yeah, me too. I get excited. My wife gets excited when I have other people to talk to about it because yeah, I can go on and on too. I was going to say, so impact investing is one of the sayings is to do you do well while doing good, right? Or
Yeah,
whatever, do good while doing well.
yeah,
With your investments as well as helping people. That kind of gets me onto the another point I wanted to discuss with you, which was teaching your
yeah,
family and kids how to do that and just
yeah.
set up that sort of legacy, right? And financially as well as on a value basis.
Yeah, yeah, 100%. And I think that these are great conversations, right? Because, like our generation, we work very hard, for what we have and we're conscientious about it. We've learned to think like an investor. But really, there's some interesting data points around that, right? And the
Around
number,
generational wealth.
yeah. Yeah, yeah. So we work so hard, right? Whether depending on where you're at, right? Maybe it's to, put the kids through college and, just maybe at the first level, right? We want to be able to put the kids through college and, maybe help with wedding, get them their weddings, and they can go a step further, right? Then we're helping with their homes. And then maybe, we want to establish something that even future generations can, tap into, right? It just gets more and more and more. But there's some really interesting data points on that, because if we're not educating, right, and then
Right.
getting them involved, then we already talked about how I don't know if this was recorded or not, but 80% of people that, have money, right, through, let's say, death, divorce, or whatever, they weren't custodians of it before, 80% of them end up losing it, right, because they're not
Right.
educated. And so I'm just talking, in that case, I'm just talking about like adults.
Yep.
Right? I'm not
Yep.
talking about the next generation, right?
Yeah.
Because
Statistics on lottery winners, for example, all that. Right.
yeah, yeah, yeah.
Tragic.
Yeah. So there's a part of private investing that I really love because you are educated in the process and we do take the time to do that. So it is a measure of philanthropy, but it's just not blindly giving, right? I'm not a big supporter of that because I'm a big supporter of people being educated in where they
Right.
place their capital at the same time. So impact investing is a wonderful way to understand what's happening, but also to blend a version of philanthropy with it, right? So
Right.
for example, you could say, we have this financial educated nonprofit where we financially educate people, we give them credit, right? That there's many nonprofits that do that, right? Or you can say, we're going to take it one step at a time, one tranche at a time, and we're going to help them with consolidating and give them financial and credit education. Or that's the current one that's almost done. The past one was, we're going to aggregate a building and also do the same thing, right, at the same time. And so you can start to quantify how many people that you're actually helping and what you're actually doing, as opposed to just, oh, I'm going to blindly give this. And you're not learning anything in the process.
Right.
And you're not perpetually able to do it over and over and over and over again. So by having these discussions with our children and our next generation, or nieces and nephews, whoever's in our concentric circles, then we really can empower them with that knowledge and the clarity to not only be good stewards of capital, but also to facilitate having purposeful conversations about how we're going to get involved as a family and direct capital to these very impactful strategies that will make the world better and also grow and protect what we have. So there's an element of that. So there's one thing to grow, right? But then you can, and in our world, in the impact world, sometimes people use DAFs, right? Donor advised funds, and that's how you can, lessen your tax obligation. So I talk about those too as well. And typically they only go to nonprofits. But the reason why we take the time and teach them is because you can use that and put money in your DAF and invest in our impact-based opportunities, because everything that we do has an impact lens, and get that tax deduction, right? In addition to like the tax excise. So we talk about those types of things too, because you can do that with impact and the impact funds as well.
Right. So I saw some interesting statistics on generational wealth and how, on average, 70% of the wealth is lost by the second generation and 90% by the grandchildren, by the third generation. And the biggest trap that causes that is the lack of education, right? As you give them stuff instead of skills, right? And so sort of piggybacking on what you said, right? Instead of just sort of providing them with things and growing that entitlement mindset, that you actually educate them and give them the skills to do more than you did.
Yeah. And there's a difference between when you are doing it. So for example, for me, I wanted to learn and understand and educate, because if you don't, there are so many people that are like piranhas and they're trying to, present, handle, take control, all of these things, right? And I'm not telling you anything that you don't know. You could guess that, right? Yeah. So with that being said, the onus is upon us to educate ourselves, but then also the next generation, so that way you are protected and you're participating in these types of things. So aligning investments with personal values and people that come, children that come behind us, it's more important now than ever. And there's a greater need for more financial education now to even preserve what we have, because you help them to care, right? Many of this next generation, right? They are definitely more fans of impact as well. So that's how you get them involved. That's how they care, because it's a different mindset when you have to like grit and grind in order to get to, what you guys are trying to create for your family. It's a different mentality and a different mindset and a different lens focus. Versus someone, I look at my children. I'm going to an event next week in Vermont. Here's an example. Everyone comes together, solve a complex problem, right? And my girls are going to go on hikes, and then they're going to go and look at Dartmouth, right? I couldn't even go to Dartmouth. My dad was a corporate engineer. My mom stayed at home. They were great family, very religious family, great family, but they couldn't say, would you like to do a tour at Dartmouth while I'm at this conference? Right?
Right.
No, that did not that did not happen for us. And I'll give you one step further. Um, my grandparents were farmers, and I spent the entire summer with them. Life with them looked very different. And actually, to be frank, even with all my degrees, I still think back to how my grandfather provided for his 11 kids by going
11.
to, what'd you say?
11. 11. Wow.
Yeah, 11 kids, no degree, poor American Indian man. And he would go to the flea markets, and he would buy all sorts of things, buy low, sell them high. And even with all my degrees, to be frank, Tim, I still reflect back on that when it comes to buying an asset, right? When people say they got something off market, I'm like, what does that mean? What does that mean to you? And I'm wondering, like, because I always want a deal. I've never lost money in real estate ever because I'm always looking for a deal. And I look for that because I spent the whole summers with my grandparents. And that is how he provided for 11 kids. He put his margin on it, right? He'd add his value. It's very simple. Add value, margin, turn around and he'd sell it, right? And even with all of my complex degrees that I have, to be frank, I still think back on that. And I would run their fruit and vegetable stand, and he would sell, things that he would find at the flea market. And I still go back to that mentality. I really, really do. And it's really helpful because they were at a different stage where they were trying to just provide for their 11 kids.
Sure.
And so, what were we going to say?
I was going to say there's a lot of great lessons just being in as a farmer, being in sort of an agrarian culture where you reap what you sow, right? It's not instant gratification. You have to plan for the future appropriately, right? And those are often overlooked nowadays.
Yeah. Oh, 100%, 100%. Right. So, bed pretty early. Entertainment was watching the fireplace and at night, and then we'd, pick berries, and I'd spend the days. To me, I'm very entrepreneurial, right? So I loved running their big fruit and vegetable stand during the days.
Okay.
But it was a beautiful lesson filled summer. And I did that for multiple summers, right? So it was very riddled with lessons that I still even reflect on even now with complex transactions. I'm like, what does that mean on sale, off market? What does that mean? I'm always at, what does that mean off market? I always ask those, how much off market, right? But because of what I experienced throughout the summers.
Okay, excellent. That's awesome. Okay, I'd like to ask about some of the biggest challenges you had to overcome in your career.
Yeah. A is I wish that I would have there's so many, right? A is the first thing, I wish I wouldn't have started a business. I wish I would have acquired one that was already working, right?
Oh, okay.
So that's A. That is one thing
that was a challenge that slowed you down anyway, I guess.
Oh, 100%. There's so many lessons that are learned. Yeah. So now my advice is, depending on where you're at and where you're trying to go, right? If you're okay sleeping on the couch and like, I want to create this highly innovative, scalable venture-backed company, okay, fine, go for it. But, if somebody was just saying, I want to have financial freedom, and I want to have a business, I want to start, I would say, let's always find something that's already existing.
Okay.
Always, right?
You don't need to develop or learn those skills yourself. You don't need to reinvent the wheel. Just go with something that's already.
I wished I would have known that 25 years ago, right? Okay. So even now, when I'm always asked to look at a real estate project, even this morning at a commercial real estate, she wanted to tell me about land, and I go, no, here's what I'm looking for. I never want to build there's just too many margins of, errors that I'm not interested in at this point, because I want the focus to be on the impact, and I want the focus to be on the education and the legacy, the impact investing and the legacy, right? Not on creating there's just too many other intangibles that could possibly occur and happen. But I've learned that. And so now I don't create anything from from scratch. I'm always looking for something drastically reduced. Always.
Okay. It's the best investors are looking for asymmetric returns, right? And they're trying to mitigate and get better risk-adjusted returns.
Yeah, 100%. So those are things that I wish I would have known, because on the business side, to be quite frank, right, I had to reinvent that twice before we got it to work and turned it into a subscription model business that
Right.
actually worked. But I had to rechange it twice, repackage it, rechange it twice. So had I known what I know now, I would not have done that. I would have acquired something in the areas that, I see now that would have been more beneficial for me. So I would not have done
Sure.
that because that was a big mistake. I invested in a lot of patents, trademarks, things early on without proving the model first, right? I invested in a lot of proprietary formulas without proving models first, a lot of proprietary trademark things, a lot of upfront capital without actually having the engine, right, of the
Sure.
business that was working. That was a big mistake. I wish I would not have done that.
Okay. Did you need to go through some of that though? Because if somebody just tells you, don't do that, you don't fully divine or appreciate why, right? So you said you wouldn't do some of that over again, knowing what you know now. But if somebody would have told you back then, would that have been enough to make the same decision?
I think so. I didn't know the process to do it, and I didn't think that I could, because I was starting something that I thought I could do,
I
as
see.
opposed to understanding that there are ones out there. Like, for example, even with our commercial real estate, there was somebody selling, great intersection, this big auto repair store, right? They were selling it for 1.8 million. And I looked back then, 20 years ago, or let's see, when I started my first business, it would have been about 14. It's 14 years. So back then, I would have seen that and like, oh, I'm not passionate about it. Oh, I don't think I'd like that. Oh, I don't know how to do that. But now it's like, honey, you can figure it out. And many of them will stay on in order to coach you and mentor you because of what they built. They don't want it to die. So
Right.
now, if I was my, 48-year-old self talking to myself that was, 13, 14 years ago, I would have said, find somebody that has built this great thing, whatever it is, let's call it asset business, and they don't want it to die, and yet they're just tired and they
Right.
want someone to take it over. So now I really strategically, I put feelers out. Do you know anybody
Yep.
who has an asset that they want to get rid of? I literally do those types of deals, and I'm doing it now for our next real
Right.
estate deal because I already know what we want to do with it. So I do it even now, and I feel like a gift I was created with was the connection. So I do that now with my connections.
Okay.
Here's what I'm looking for, and I am not afraid to ask. Versus back then, oh, what are they going to think of me? They're not going to think I'm smart. They're not going to think that this. I didn't have the confidence. And now it's
Right.
like, I don't care. I'm trying to reach this goal here. Who can help me?
Yep.
I don't
Awesome.
care.
Yeah, you have to know what you want and you have to ask for it.
Yeah.
Yeah, we do something similar. Just trying to, in terms of real estate, looking for owners one of our aims or arms is to, particularly with rates being where they are and values being a little bit off in the market cycle, trying to give them their price through creative financing, right? And looking for people who are tired, they don't want to manage it themselves, more the mom and pops, 30, 40 unit properties, but very similar, right? Mindset, which I'm a big fan of. So, Tanea, if people would like to connect with you and learn more about ICI, or what is it?
I see. It stands for the Impact Investing Community, right?
Right.
Because we do share private opportunities to invest in, but also we're also educating. Like I teach this course that's on record, like how to analyze any private deal in 60 minutes or less. And I have another one on DAFs and charitable LLCs because in our world, right, it's growing, but it's also protecting, right? And
Right.
minimizing tax obligations. So,
Okay. So IIC Capital, where can they get some of the great things you just mentioned?
Yep. So it's ic-capital.com, right? And then you can connect with me, Tanea, at iic-capital, capital.com. And yes, if you want to spend your time making the world better and also growing and protecting what you have, right? Then it's wonderful for us to be able to talk about how you can spend your time on earth being able to do so. That's
awesome. That's lovely stuff. All right. So, is there anything else I should have brought up? Because you have anything exciting going on for the rest? Any initiatives or anything you want to promote in the next 12 months, for example? You're switching funds, maybe.
No. Well, we have that active first responders debt fund, which pays a coupon rate, right? Okay. This is public, so just contact me if you want to know what that is. And it pays you quarterly. And then if you want to be on our next real estate deal, right, where we give first-time home buyers an opportunity to buy a house, then you can join our early commit for that one as well. So that'll be our next real estate project.
Awesome. Thank you. All right.
And we have one that we're tying up in Houston, by the way. So one more that we're kind of finishing. Yeah. Okay. That was excellent. That was a bank owned deal. I love things. Things on the dollar. Yeah.
On sale.
So we have a little bit more on that one. So love things that are 50% on the dollar.
Heck yeah. Okay. Very cool. All
and right. That one was that. Those are kind of deals I like. Half off.
Yep.
You can't do it anymore. Great.
Okay, great. Well, thank you everybody for watching and listening. Thank you very much, Tanana Hairston, for joining me today. We appreciate you sharing your story and insights into success and impact in investing.
Perfect. Thanks, Tim.
Inspired by our guests? Visit phoenixprosperitypodcast.com/guest and join us on the show and share your success story with Tim. The spotlight awaits.